All of the major averages moving higher once again this morning on fresh economic data that we're getting out. A key reading on the consumer, also another key reading on inflation. When it comes to consumer retail sales during the month of October, cooling as consumers pull back on discretionary spending amid a sticky inflation environment. Tech led Tuesday's gains, with the Nasdaq posting its best day that we've seen since April. Now remember, tech led the market in the first half of the year, with the hype surrounding AI, artificial intelligence, fueling that rally. Yahoo Finance's Julie Hyman spoke with ARK Invest CEO Kathy Wood on her positioning toward the AI hype cycle yesterday. Let's take a listen to what she had to say.
Everyone knows NVIDIA has been the enabler of these amazing breakthroughs in AI, but they're not thinking about who the prime beneficiaries are going to be. And we've taken a strong point of view on that. Every stock in our portfolio practically is there with AI as a reason.
All right, for more on how to play the year-end rally and what to expect looking ahead to 2024, we want to bring in Keith Lerner, Truist Co-Chief Investment Officer. Keith, it's good to see you. So we just heard from Kathy, her perspective on some of the AI leading names that we're seeing in the market today. I know you recently upgraded the tech sector to overweight on a technical basis. What are you seeing?
Yeah, well, first of all, great to be with you, Seana and Brad. Nice to see some green. Market's been doing really well. In fact, our view has been more positive the last month or so. And specifically to tech, I do think tech is leadership and will continue to be leadership. When you look at this market, they were leadership earlier this year, and then the technology sector just digested the gains. And what was notable, it was the last sector to go down during the correction, but it also came back the strongest. And we just made, as you mentioned, on a technical basis, a 5-month relative high to the overall market. So what does that tell you? That the old leadership this year is still the new leadership, which is tech. And we think that likely has more legs before the end of the year.
And so does that mean Santa Claus rally full on, Keith?
Yeah, it's hard for me because we wrote a note on October 27th when the market was at 4,100, and the note title was pullback equals opportunity. So now we're up 10%. I can't be as bullish as we were there, and part of the reason was that we were positive then. There's several factors, but you're talking about seasonality. The low in seasonality was the end of October, and then it starts to move higher. So to put a final point on it, we still think there's some more upside from here, but we've just gone up 10%. So we have to be realistic that we've come a long way. I think near term, likely what happens as you get around this 45, 41, which is the high that we saw in the beginning of September, maybe you just digest, go back and forth a little bit before another move higher. But I would say if we digest, chop around a little bit, I would be looking at tech as an opportunity to add. And I also think other areas like small caps likely have further to go, which are still only up about 2 or 3% this year.
Yeah, Keith, what do you think that upside looks like for small caps?
I think it could be somewhat larger than it is for large caps. Again, I think technology has definitely shown their leadership, but more from mean reversion. End of the year, we had a lot of tax loss selling. You think about fund companies, that their tax year end is October. So small caps are only up about 3% this year. And I think there will be somewhat of a chase. We saw that yesterday. I think that likely has more to go. So if large caps are up 3 or 4%, maybe small caps can be up 6 or 7. It's hard for me to say an exact number. I would just say probably more on a short-term basis. Ultimately, as we move into next year, we still think large caps are the place to be, but we're recognizing that they're still oversold and haven't done much this year.
And what is that catalyst for large caps once we get into next year from your perspective, Keith?
Yeah, well, listen, I think a couple of things. The catalyst so far this year has been the economy has been more resilient than most expectations, and that earnings have also proven somewhat strong. So I think some of that continues. I do think next year, if we have a strong rally into year end that continues, I think that sets us up for more of choppy waters in the beginning of next year. So I'm not saying we're off to the races, but I do think if you think about technology, that earnings will likely continue to hold up well, because even if the economy slows down from where it's been, companies will likely continue to invest in technology, otherwise risk being left behind as far as from just a corporate competitiveness standpoint.
Keith, you also recently downgraded the energy sector to neutral from overweight. We certainly have seen crude pull back from the highs that we saw not too long ago. What do you think, what's it going to take? Why are you on the sidelines now? And do you see potentially returning to a bull case as you look ahead to 2024?
Yeah, I would think, based on what I know today, we would be more likely to upgrade from neutral than to downgrade to underweight. Of course, we're going to let our process dictate that. But, I think it's one of the things where, part of this, you mentioned it, we have a quantitative process. The technical trends have softened quite a bit. Energy's pulled back quite a bit. Longer term, they're still relatively cheap. I think the low end of oil prices will be higher than it has been historically. So for someone who's not looking as tactically as we are with our sector strategy, I think energy will be just fine. And this, as we move into next year, there's a lot of geopolitical risk, and even beyond just our own elections as well. So I do think, for someone that has a little bit longer standpoint, that energy is still going to do fine. And like I said, we're likely to look for an opportunity to upgrade that sometime next year.
Yeah, CEOs really already kind of earmarking geopolitical tension, risk as one of their top concerns for growth over the next 3 years. So we'll see how that plays out in the general elections and what more is to come on that front over the course of 2024 too. Keith, always a pleasure to get some of your insights. Thanks for joining us just after the opening bell here in the U.S. Keith Lerner, Truist Co-Chief Investment Officer, and happy birthday.
Thanks, guys. I really
it's your
appreciate
birthday?
that.
Happy birthday, Keith.
I don't know who's telling you guys this inside information, but I certainly appreciate it.
It was the government. The government told us.
Very happy birthday.
Thanks so much,
Thank
Keith.
you.